Thank you very much. Welcome to the Halftime Report. I am Scott Wapner. We begin with breaking news. The Supreme Court striking down the Trump tariffs, as you know by now, a long-awaited ruling that does have markets reacting. We're trading all of that, of course, with the Investment Committee. Joining me for the hour today, Kevin Simpson, Bill Baruch, Jim Lebenthal, and Josh Brown. We'll go to the markets here where I think we're still trying to digest this ruling. It is the NASDAQ that's having the best day of it today, but we are green across the board except for the Russell, which we will call flat. But the headline is, as you know, 6-3, the court striking down the Trump tariffs. In terms of markets, discretionary, interesting to watch, as we've been talking about for the last few hours. Industrials also. We'll go right to Eamon Javers here at the White House as we're still waiting for I think a larger reaction from not only the president, Eamon, but the administration at large, and what you may be hearing from your vantage point there.
Scott, we're about to get that reaction. Caroline Leavitt, the White House press secretary, just posting on social media within the past 30 seconds or so that President Trump will hold a press briefing on the Supreme Court's tariff decision at 12:45 p.m. Eastern time. So she's saying that the president will speak directly to the press at the White House in about 45 minutes time about this and offer his first on-camera reaction to it. We do know that behind closed doors this morning, he called the Supreme Court's sweeping 6-3 decision against his tariff authority under that law, IEEPA, disgraceful. The president has said that this was one of the most important authorities that he wielded as president because it gave him tremendous negotiating leverage with countries around the world. But the Supreme Court this morning has struck that authority down. The Supreme Court putting this in historic context, Scott. And I want to read you from the opinion of the court from Justice Roberts, who said, Article 1, Section 8 of the Constitution sets forth the power of the legislative branch, and in that power, the first clause is that Congress shall have the power to lay and collect taxes, duties, imposts, and excises. Roberts says it's no accident that this power appears first. And then he says, what common sense suggests, congressional practice confirms. When Congress has delegated its tariff powers, it has done so in explicit terms and subject to strict limits. What Justice Roberts is saying here, the Chief Justice of the Supreme Court, is that Congress has the taxation authority under the Constitution, not the executive branch, not the President of the United States. And because in this law, IEEPA, the International Emergency Economic Powers Act, Congress never explicitly said the word tariff, then the president doesn't have the authority to levy tariffs under that law, period. End of argument. And that sets up a $133 billion free-for-all over how that money that the United States government collected in 2025 and early 2026 will be redistributed to the companies that paid it, the Customs and Border Protection, over the course of the year last year. About $133+ billion now has to be redistributed back to those companies. You can imagine that is going to be a bureaucratic, mechanical, and legal difficulty, hornet's nest, maybe you could say even, in terms of how that money gets back to those companies. But that's what's coming next. And then we'll wait to see what the president says at 12:45 about how he intends to do a workaround. They've said that they're going to do that, and how he intends to impose tariffs again now that the Supreme Court has removed this particular authority, Scott.
You can just use the word, Eamon, that some on the court themselves have used, a mess. Is how this is going to be thought of in terms of whatever remedy now exists. And you know, as you said, just to remind people, 12:45 p.m., which we'll obviously be carrying live on CNBC, you're going to hear from the president, Eamon, directly. And I wonder to what degree do we hear from some others who have made the case over the tariffs? The Commerce Secretary, Lutnick, Kevin Hassett, himself, who was sort of embroiled in that controversy already this week about the reporting on who actually pays the cost of the tariffs, which we already frankly knew who did. It was just confirmed yet again by another report.
Yeah, I mean, look, Scott, the big question in my mind about this press conference that we're going to see in about 40 minutes' time is this going to be a reaction press conference, or is this going to be a rollout press conference? Remember, this was the expected outcome of this case, and it has been the expected outcome of this case for some months now. So the White House has had a lot of time behind the scenes to think about what they're going to do. They've said they have all these other authorities under the law to impose tariffs. Will we see at 12:45 sort of a policy rollout of the new tariff authority by this administration? All these old authorities that the administration can lean on do require, some time frame, some process of an investigation, some other mechanics that make it slower and more bureaucratic to impose tariffs. But the president can impose tariffs through these other means. So is that what we're going to see? Or are we going to see the president coming out and just denouncing the Supreme Court and saying why this is a terrible idea? We'll wait and see.
Maybe a combination of both, but we will.
Right.
We will wait for the president. Eamon, thanks for your reporting. Appreciate that.
You bet.
It's Eamon Javers down at our bureau in Washington. Let's kick this around. I mean, I told you what's been sort of moving here, unsurprisingly. Discretionary, industrials. How are you thinking about this, Jimmy?
As you just said, first and foremost, it's not a surprise. Just the oral arguments 3 months ago indicated this is the way the court is going to go. So the markets don't like surprises. Not surprising, the market is up. But what this means is in the short term, trade policy uncertainty increases. In the long run, it decreases. But just consider this for a second. There are a number of trade deals that have been done with countries over the last several months that are now drawn into question. South Korea has been dragging its feet on a trade deal that was agreed to, at least verbally. And now I think we know why. They thought this was the ruling that was going to come out. Japan just this week got started on some of the investments it made, but maybe they're going to start slow walking as well. Now, in the end, there is going to be longer-term policy certainty increase because of this. We'll see what the tariffs are that the government, that the presidential administration is going to use, what statutes they're going to use at this press conference. They're going to be lower tariffs than what was, the president could come out on any day and say, I'm going to charge 150% tariffs on China. This is good news that he can't do that anymore. The statutes that are being looked at have limits to them, like 15%. So, the markets should like this because people like me, Kevin, Josh, Bill, are not going to wake up in the morning and say, oh, my goodness, one of my companies is in the crosshairs of what the president likes or doesn't like.
Yet, Josh, as we, were just discussing with Eamon, the prospects of this now being a quote unquote mess to figure out has just broad implications for, potentially how the markets and the different sectors within it react based on what sort of outcomes probabilities are given to.
You know what? I think I agree with everything Jim said. I just don't know if I agree with the conclusion. I actually don't think this is as positive to the market as most people would have thought it had been. Like, for example, if this ruling had happened 6 months ago, I could see a scenario where the Dow rallies 1,200 points. Because 6 months ago, this was like the #1 overhang, especially with respect to metals and mining, industrials, even pharmaceuticals, automobiles. Like, this was really a huge issue, psychological issue that the market had been wrestling with. And you remember, you would hear like Lutnick do a CNBC appearance, and you would see the futures swing massively, either up or down, based on what he was saying on this issue. And where I slightly disagree with Jim is I just don't think that this issue holds as much power over the market as it did. I think we sort of just got used to it. And yes, there were winners and there were losers. And now we're having like rebukes of economists who said that this would lead to some sort of problem for the economy. The reality is, I think the market looked at this as, all right, great. If the tariffs come off, or are modified in some way, or if there's a court challenge, that'll be a mild positive. And that's what I think you're seeing playing out. Right next to me, you see the S&P barely mustering 0.5% in rally. Because now the next phase of this is more saber rattling, more speeches, more Lutnick appearances, and then Trump appearances. If you know anything about the Trumps, they're not gonna go away. Like, this isn't, I guess the court ruled against me, therefore I give up. LOL. So now what happens is we go back to the environment of 6 months ago, where we have to have this roller coaster ride every day about who has the upper hand in this issue. So I don't know if it's bullish. And the market is telling me today it's not.
That's interesting. If I told you, okay, well, whatever your expectation is for future rate cuts, dial them back.
Yeah.
At least as we sit here today. Now, others would say we didn't need the Fed in the first place anyway because, despite the lower than expected GDP report that we just got, the economy is still poised to perform well. And most importantly, many would argue earnings have been really good. You've gotten, your double-digit earnings growth, and the prospects of continuing to do that are high enough that the Fed is sort of an afterthought. You don't want it to be working against you, but you may not have the wind at your back that you once thought you might.
It shouldn't be working against you. I don't think we need the wind in our sails from the Fed. And the Fed is going to have a problem in front of it of potentially $200 billion of tariff rebates coming into the economy. And even for a $30 trillion economy like ours, that's a lot of money. There's also going to be upward pressure on the curve from more deficit financing that's necessary without the tariff money coming in. So I'm not surprised that the odds of a rate cut have gone down. I am strongly of the camp that this is a market that doesn't need rate cuts. But by the same token, we better make sure that things don't go the other direction. I don't think they will. The absence of tariffs or the reduction of tariffs should keep inflation in check. I just have to say this, Scott. I think in the long run, another reason I'm positive is the Supreme Court cited Article 1 of the Constitution, the separation of powers. The Supreme Court just laid down a line and said, this is as far as you go with the extension of executive powers. The markets are going to like that. We've been in this strange sort of multiverse world of the president does whatever he wants. There are limits now.
All right, what's funny, Josh, is that before we got the decision, we're like all bulled up to lead on this idea that Citi downgraded tech today. As we finish this week, where we're assessing the durability of that trade, and we're looking ahead to Nvidia earnings next week, which are the next big event that could have an impact on where the sector trades. They downgraded technology today, along with discretionary, and they have moved 50% of their U.S. allocation into small caps. Now, the Russell is leading on the year, 7%. It's like blowing everything else away. What do you make of that call today from Citi?
A lot of people would make fun of that. They'd say, oh, okay, so you have like 50 mega cap tech stocks that are down 30% and you're downgrading it today. But I don't disagree with the wisdom and the timing of the call, because I do think that we're going to be in for a frustrating year for tech. It doesn't mean that all the tech stocks are going down. I own a bunch of them. I just think a lot of rallies are going to get sold because the negative overhang about the biggest theme in tech, which is obviously AI adoption and AI capex, like that negative miasma that we're like all living under this cloud of, it's not going to dissipate. And if anything, in certain areas, the uncertainty is going to only grow. It's almost impossible to envision a scenario where it doesn't. And so much of tech market cap is software, and so much of tech market cap is hyperscaler. And those questions are increasing, not decreasing. We get periodic breaks, and we see like a green day for the software names, and everyone goes, oh, thank God, it was such a huge overreaction, it's finally over. It's not. We know it's not. It can't be. It's too soon. Nobody feels good about any of this stuff. So what we're doing right now is we're repricing the future cash flows of what these software companies are going to be. It's violent. It's not all sane. Some of the behavior is insane. We won't know which is which for a long time to come. And so I like the call. And then when you look at this other part of the market, you look at small cap, mid cap, industrial, cyclical, you look at anything but enterprise SaaS, there are some really great stories happening. And the irony, it's almost like an O. Henry short story. It's almost like a gift of the Magi. The irony here is so much of the earnings growth that will probably get out of small and mid cap is because of AI. We're going to start getting a re-rating for the buyers of these products because they're going to have a positive story to tell about efficiencies, cost savings, hiring less people, lower pressure on wages, et cetera. So it's kind of funny. We want to now pivot the AI trade from the providers to the beneficiaries, and the beneficiaries are in the Russell, small cap 600, mid cap 400, and that's really what's working, and I like the call. I think that will continue.
So I saw you posting some things about private credit, which is once again in the news, as we know, because of Blue Owl, which was, last I checked, down again after limiting those withdrawals from one of its funds. There's the stock, the company coming on with David Faber and the gang earlier today to try and, allay some of the fears around that. Do you have broader thoughts?
They need a new PR firm would be, I guess, the first thing that I come up with. They should be talking to maybe Jen Connolly or Street Cred or Prosec. This is whatever they're doing with, oh, you want 5% redemption, here's 35%. It's not working. I know a lot of this stuff is not about the fundamentals, it's about the messaging. But messaging becomes really important when you have assets that are in question and don't price on a day-to-day basis, or the pricing is left to the discretion of the people managing the fund. This is very different than public markets, both on the equity and the credit side. And I think you need to be more sensitive to the messaging, not less, versus, let's say, somebody managing a traditional mutual fund or separately managed account strategy with stocks and public bonds. And we're getting the opposite of sensitivity here. We're sort of getting this cavalier attitude of the market's stupid, the media is against us, nobody understands the math, blah, blah, blah. And it can be fixed. And I don't think that these companies, any of them, are sitting on this mountain of toxic assets like it's 2007. I don't believe that to be the case. That being said, I am not in these markets. We don't allocate to these types of things. People looked at us and said, what's your private credit strategy, blah, 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 you're behind the curve. All the other wealth managers are plowing full speed ahead. Well, congratulations. We avoid it. But I am paying very close attention because I think there's a sentiment impact to the broader market, and we're starting to see that more and more with every passing week.
It's a nervous market. There's no question about that.
Yeah.
Let me show you shares of CoreWeave, for example, which tell a story in its own right. The stock does, which has been down. Now it's down 12%. Okay. The story there was that a report suggested that Blue Owl shopped debt for a $4 billion CoreWeave data center in Pennsylvania. They failed to arrange the financing. To which CoreWeave's CEO, I don't know if you all were watching earlier today, had literally texted Jim Cramer on the air during the 9 o'clock hour that the data center's fully funded, financed, and on schedule. It's very much, you take that for whatever you will. It's a shoot first, ask questions second part of the market. And it probably will be for the foreseeable near-term future.
It really is. And I can't see it changing. I mean, on the one hand, I want to say something positive, and will, that the $1.4 billion of loans that Blue Owl sold over the past several days, they sold at par value. So at least those loans were not impaired. The question that hangs is what's the rest of their portfolio look like, and we don't know. And unfortunately, Scott, you're absolutely right. There's going to be shoot first. There's going to be rumors like we just saw with CoreWeave. Oracle's down meaningfully today, I think about 3.5% at the last look. They've got major financing needs coming up, and Blue Owl has been a source of financing. So, I think what we need to see here is time and some degree of financing getting completed.
All right, welcome back. Josh Brown's best stocks in the market is today highlighting Old Dominion Freight Line, ODFL, and I guess for good reason. Stock's up 16% in a month, almost 56 in 3.
Yeah, and it's been on our list for a long time, and we chose to write about it this week because we looked at the fallout from what happened last week when they hit all the trucking and logistics and shipping stocks on absurd AI fears that were generated from a press release issued by a penny stock. And out of the whole group, this is a perfect chart, leave this right here. Out of the whole group, this one acted the best. It never got anywhere near its rising 200-day moving average. The buyers came in really quickly, took it right back up into that uptrend. Basically, we got ourselves a float shrinker on our hands. This is a company that's been buying back a ton of stock, but they can walk and chew gum. In addition to the buybacks, they are also hammering all of their fundamental expectations in the eyes of analysts quarter after quarter. They had a really tough time coming out of the pandemic. All of these trucking companies put on way too much capacity, and then the whole economy shifted from goods to services, and all of that investment that they made looked stupid, and the stocks got hammered. Now we're on the other side of that. We see rising utilization rates, and these companies that made the investment and stuck through it are the leaders of the space. Technically, this is really easy. Traders can use the rising 50-day as a pivot point. That's about 175. I think you want to revisit that on a closing weekly basis, not get whipsawed day to day. So long as the stock can maintain that 175, I think you want to be long. Longer-term investors can use 156, 158. That was the prior level of resistance that eventually became support. Pull back the chart one last time before I toss it to the desk. I want you guys to understand what it means to be a best stock in the market. Give me 1 year, 3 years. That doesn't mean it's always in an uptrend or you always want to own it. This is a very specific breakout with a very specific retest of the rising 50-day. The retest was successful, and that's why it's on the list. Won't always be on the list, and that's what we try to deliver to the readers at CNBC Pro every time we publish. Scott?
All right. Josh, thank you very much. Expertly done, especially the toss back to the desk. It's Josh Brown. We'll step away. We'll come back with more.
While.
Yes, you have. Not your first rodeo. Okay, obviously a busy news day as we await the president, but, oh yeah, Nvidia reports next week. Josh?
Yes, and they're reporting on my birthday. I don't know if that's good or bad. Next Wednesday, February 25th, we will hear from arguably the most important company in the world. I think the news flow going into the report has been pretty good. A lot of stuff with the OpenAI has sort of been clearing up. Some of the stuff with Meta has been clearing up. I don't know how deliberate that is, but it just seems to be that people are thinking more positively about Nvidia's dominance being maintained this year. The revenue for the quarter, $65 billion, gross margins 75% ex-China. That would be 14% sequential growth from Q3's record quarter already, and 72% earnings per share growth. So if they come in the neighborhood, I think the stock holds up just fine.
Yeah. What about the rest of the tech trade, Jimmy?
I actually feel good about it. I think the uncertainty that we talked about earlier has a lot to do with the funding issues that we were talking about with Blue Owl. I know that's for more specific software, but I think it extends to the ecosystem. I think that will heal over time.
All right. We'll be back right after this. Still waiting on the president there in the briefing room. His first public reaction to the Supreme Court striking down his tariffs. We will take you there live as soon as we see President Trump. A reminder, later on, Closing Bell, we'll react to everything, whatever the president says and what the market reaction could be going forward with Wharton School professor Jeremy Siegel. So we're happy to have him with us today, and I hope you'll join me then as well. Let's do some final trades. Josh Brown, what do you have for us as we await the president here?
Apple pulled back Friday, just barely. Green again. I really like the setup here for the stock going into the rest of the year.
All right, yeah, you've been talking about that one lately for sure. Got an event coming up, we think, in March, too. Farmer Jim.
Transocean, I've talked about this recently. They had earnings last night, cash flows better than expected, debt levels lower than expected. They're doing a merger with Valaris. The slightest bit of analysis will turn you positive on the stock.
Bill Baruch.
App loving, and now there's a lot of positive news around it, terrific margins, and it's been beaten down. This is a great place to step in.
Microsoft.
Well, what are you looking at me? Who do you think's left?
As far as AI is concerned, Copilot is a show-me story, but the Azure growth is real. Under $400 a share, I like the name.
Still needed to be prompted after all the time we've spent together?
I'm not used to this one chair.
Yeah, all right, you're a little close to the sun.
Don't get used to it.
All right, so look, we are, as we said, all joking aside, we are waiting for President Trump there in the briefing room imminently to respond publicly for the very first time to that Supreme Court decision. I will see you at 3 o'clock on the Closing Bell.
Let's talk a little bit more about the impact on the markets today. Tom Lee is Fundstrat's head of research and a CNBC contributor. Tom, it's great to have you here. Just offer your reaction as far as like the investment case is to be made here. What's the impact of the Supreme Court moving to strike down the bulk of these tariffs now?
Well, I think investors are, one, generally relieved. I know it adds some uncertainty, but I think that they might actually also breathe a sigh of relief that it's kind of putting limits on executive powers. I also think stocks are going to start to be bifurcated on what stocks are sort of unaffected by these tariffs versus those that have some either positive but uncertain timing of when that happens. I kind of think this is going to help revive the technology, software, and even the crypto trade because those groups have been largely shielded from the original tariff impacts, and they're not going to have any clouds of them over the unwind or the Supreme Court ruling.
Well, they could use a reminder of their positive attributes, Tom, after the start to the year that we've had. I have to imagine you sit there, and I know we can all sing the praises of these sectors, but you look at the trading activity. Does it not make you want to jump into a Deere and a Caterpillar and materials and a Freeport? I mean, in all of these sectors, and see how much juice might be left in this trade, and maybe it's a couple of years worth. I don't know.
Yeah. Well, energy and basic materials have been our top sector pick for this year. And we like industrials. And, there's so many good fundamental reasons to sort of favor, as you've been calling, like real world companies. And I think that there is still a lot of legs to that because we know that there is an investment spending cycle coming. But I also think we're kind of in the later stages of that decline for software, which has really had a waterfall decline, and for the Mag 7, which are seen as the armies of the AI trade, not the bullet makers. So I think that that's going to provide a lot of support for the overall index, because if Mag 7 and the software stocks stabilize, it allows the market to trade higher.
Yeah, absolutely. So, I think to back up for a second, part of what supported the market the last couple of years is not just AI, it's actually just been rates coming down. And maybe the bigger story in some ways is you get a 3% inflation print, a Fed that might be a coin flip for lowering. And I'm curious how important it is to the markets, to everything we're talking about, that they continue to lower rates.
I think it's a big deal because, as you point out, from 2022 to last year, the Fed is trying to establish inflation credibility and fight inflation. So even as they cut rates, it's really been a hawkish Fed. Now that I think tariffs could reduce headline inflation and goods inflation, and we have a job market that is kind of softening and inflation cooling, I think it does allow a dovish Fed to happen. And I think with the Supreme Court ruling, it may even be a Fed that actually has a better ability to cut rates. So I think it would be positive.
Yeah. Do you think they're doing the president a favor in a weird way?
Yes. Again, I'm not a policy expert, but I think as you think about midterms and the idea that there is some potential price relief coming, it might actually be helpful for the administration.
Yeah, the affordability crisis that we hear so much about and talk so much about. Tom, thanks so much for your time today. Appreciate it.
Thank you.
Tom Lee with Fundstrat. Stand by, Tom, just for an extra moment if you can. Let's get a quick check on the markets as we look across the board at the reactions today. As mentioned, rewind to about 8:30 a.m. First, we had the data come at us. GDP was a miss. Core inflation was at 3%, like Tom mentioned. That had markets in a sour mood, moving lower, and had yields somewhat to the upside as well. Then we get this ruling out of the Supreme Court just about half an hour later, 6-3, striking down IEPA, which was the authority the president used, as we heard from James Lucier a few moments ago, to impose the bulk of his tariffs, by some count 60 to 70%. And here's the president responding for the first time directly to this issue.
It's a lot of people. That's a new record. We set a record every time. Well, thank you very much for being here. The Supreme Court's ruling on tariffs is deeply disappointing, and I'm ashamed, absolutely ashamed, for not having the courage to do what's right for our country. When you read the dissenting opinions, there's no way that anyone can argue against them. There's no way. They're so happy. And they're dancing in the streets, but they won't be dancing for long. That I can assure you. I want to be a good boy. I can destroy the trade. I can destroy the country. I'm even allowed to impose a foreign country-destroying embargo. I can embargo. I can do anything I want, but I can't charge $1. I can do anything I want to do to them, but I can't charge any money. So I'm allowed to destroy the country, but I can't charge them a little fee. I could give them a little two-cent fee, but I cannot charge under any circumstances. I cannot charge them anything. Think of that. How ridiculous is that? I'm allowed to embargo them. I'm allowed to tell them you can't do business in the United States anymore. We want you out of here. But if I want to charge them $10, I can't do that. But now the court has given me the unquestioned right to ban all sorts of things from coming into our country, to destroy foreign countries. But a much more powerful right than many people ever thought we even had, but not the right to charge a fee. How crazy is that? In fact, I can charge much more than I was charging. So I'm going to just start. Although I firmly disagree with the court's holding today, the decision might not substantially constrain a president's ability to order tariffs going forward. That's because numerous other federal statutes, which is so true, authorize the president to impose tariffs and might justify most, if not all, of the tariffs issued in this case. Even more tariffs, actually. In actuality, while I am sure that they did not mean to do so, the Supreme Court's decision today made a president's ability to both regulate trade and impose tariffs more powerful and more crystal clear rather than less. I don't think they meant that. I'm sure they didn't. It's terrible. I can do anything I want with IEEPA. Anything. I just can't charge anybody for it. I can license, I just can't charge them. It's ridiculous, but it's okay because we have other ways, numerous other ways. The ability to block, embargo, restrict, license, or impose any other condition on a foreign country's ability to conduct trade with the United States under IEEPA has been fully confirmed by this decision. In order to protect our country, a president can actually charge more tariffs than I was charging in the past period of a year under the various tariff authorities. So we can use other of the statutes, other of the tariff authorities, which have also been confirmed and are fully allowed. If you have a few questions, you can let us know. But just to end, so we're going forward, we will be able to take in more money, and there'll no longer be doubt, because there was always doubt. I know the people that brought the lawsuit, and they're sleazebags, major sleazebags, said, how are you? Nice to meet you. How's business? President, I'd love to kiss you. This is a very powerful man, but a very powerful, strong man. He's been in the steel business for many years. His father started it. And he said, sir, I want to kiss you. He said, sir, I want to kiss you so badly. And I said, thank you. But you know what? He just to finalize it, he said, oh, this is a great place in Georgia. He said, all up and down the highway. Same exact answer, sir. We're all going out of business. We're going to go bankrupt. We're all going out of business.
Hey guys, welcome to Blue Cloud Trading. Did you guys enjoy that video that I just did? Yeah, a little bit of editing. We did a little bit of, just having a little fun with the speech of Donald Trump. And look, I mean, I've got him. He's got something to say right now. I've got him on the phone here. Mr. President, you want something to say? I got to tell you, George, that was great. It was so great. A lot of people don't know this about me, but I actually do have a sense of humor, and I do appreciate it. Okay? Keep it coming. We love it. We love it. Okay? Let's go. Thank you, Mr. President. I appreciate that. That was very sweet. That was a very sweet message from the President of the United States, guys. All right. That was obviously satire. Okay, guys? It was just for fun. Let's have a little fun. It's Friday. We got to have a little fun. The weekend's coming, and we have to enjoy the weekend. It's very important that we all get out, do something fun. All right. Let's talk about the markets, though. What happened today? Well, the markets were a little bit all over the place until, that results from the Supreme Court, right? So let's look at the Dow. It was up 0.47% today. It was zigzagging pretty much all day, as you can see here, but it ended up closing up 0.47. NASDAQ, it actually opened down in the morning and then it quickly rebounded up 0.90%. It was actually up the most out of these four indices. The S&P 500 was up 0.69. Russell 2000, just 0.01, just 0.01%. All right, and let's take a look at some of this information that we're getting here from FinViz Elite. So, Supreme Court ruling against Trump's Liberation Day tariffs sparks hope for $160 to $175 billion in refunds to affected companies. Large cap tech, e-commerce, and trade-sensitive exporters, retailers outperform on tariff relief optimism. Amazon and Etsy see notable gains, reinforcing the tariff-driven move. Weaker than expected 1.4%, 1.4 Q4 GDP and hotter, less than 3% core PCE are overshadowed by the tariff news. So the tariff, what happened with the tariffs was actually really bullish for the market. It says here investors are upcoming economic data and refund litigation as next catalysts. Yeah, that might be an issue coming forth. By the way, there's a new feature in FinViz Elite, the software that I'm using. All right, let's take a look at this. Let's find out a little bit about it. It's called the Wall Street Analyst rating. So they actually pop them up on the screen, and there'll be like a little R. So when there's an upgrade or something like that, it will analyst ratings, earnings reports data with a miss and beat or beat and miss, dividends data, hundreds of indicators and overlays. This is what you can get with FinViz Elite. So consider that. There's going to be a link in the description. So please use the link that I've got in there. It's an affiliate link. I appreciate you. All right. So let's get into what we're going to cover today. So we saw some clips from the halftime report. Josh Brown was on earlier today, and they went over some ETFs and stocks, and we're going to take a look at them. Actually, there's about 9 of those that we're going to cover here: XLI, ODFL, RIG. You can see XLY, XLK, IGV, OWL, CRWV, and AppLovin. We also have, let's see here, we've got 7 member requests. Okay, so if you become a Blue Cloud trader or Blue Cloud supporter or Blue Cloud Legend level member, you can put in a request in the comment section for a stock or ETF to be analyzed live here on the show that I do usually every day. I did take a day off yesterday. Here's the Mag 7 and Tesla. We're going to cover those too. Apple, Google, Meta, Microsoft, Netflix, Nvidia, Tesla. We'll also cover the index ETFs. So let's start off with IWM. Let's start off with this one because this one actually does look quite strong still. Now, if we look at the weekly chart, and that's really important, I want you, by the way, we are using the Ichimoku indicator. Okay, this is a Japanese indicator. Its intent is to help us identify the strength of a trend. If this Ichimoku cloud, all right, that's how you would find it in the, if you click on this little plus button, if you use TC2000, you can find Ichimoku indicator in there. If this cloud is very wide, as you see here, right, the single span A is above the single span B by a good distance, and it's obviously moving up there. That's very bullish, and that's what we have here, a very bullish trend. Here's price above the 9 period, so that's the midpoint of the last 9 periods. Okay, that's called Tenkinson. That's called Kijinsen, the red line, and that's the midpoint of the last 26 periods. And then the current price, see that Chiku span is that white line there. Current price projected 26 periods into the past. Okay, and the cloud itself is basically derived by taking the midpoint of the 2 moving averages and projecting that 26 periods into the future. And then the single span B, the other part of the cloud, is the midpoint of the last 52 periods, okay, projected 26 periods into the future. And that's what creates the cloud itself. So it is based on mathematical equations, okay? And but it does a great job. Ichimoku stands for at a glance. It does a great job. At a glance, we can quickly see that we have a very bullish chart here. I also use the directional movement index down below here. I've got it at a setting of 9, and that also helps us to it's more of a confirmation tool. What I'm essentially looking for is the green line here, the positive DI9, to be above the negative DI9. That's important. So green line above red line, we've got that. The white line that you see here is called the ADX. I've got that at a setting of 9. And if it's moving sideways, all that means essentially is that there's really no true moment. There's no momentum here. And you can see it actually in the price, right? Price is just moving sideways. When price starts to break up, like and start move up, like over here, you'll see the ADX move up, and that's a nice little signal right there. If we go straight up, you'll notice that price will also move up. The second the ADX starts to decline, like it did right there, if you go straight up, let's look and see how price reacted. Boom. So the momentum, this is really good for us to quickly assess the momentum in the market. All right. So I like IWM. It looks good here still. We're just moving sideways here for multiple weeks, though. Okay, almost like 2 months here. And on the daily chart, yeah, you can see it even more clearly. But we were up slightly, 0.01%. FEZ is the Eurostox 50. They got a nice bounce today, up 1.36%. They did better than all the index ETFs. And so this one looks pretty good. I like FEZ, looks good on the daily, looks good on the weekly chart. Notice how that one is, in fact, a nice strong uptrend. And the ADX is actually moving up. Okay, so that's important. That's telling us that there's an actual move happening here, right? What about the SPY, S&P 500? Not so much. You get the red line above the green line, and the ADX is moving sideways, and you can see it very clearly here in price. Just sideways action here on the weekly chart. This is multiple. We're talking about 3 weeks, 3 months now or so, easily, right? Since actually even from November. Wow, yeah. So, yeah, not good. You can see the daily chart is also just zigzagging all over the place. We don't have a clear direction here yet, but it was up 0.72%. We were in the cloud yesterday and the day before. We were under the moving averages. Today, we broke through them on the daily chart. Here's the QQQ ETF. This one moved up as well, up 0.88%, but look where it stalled, right at the cloud. So when price gets under the cloud, it's a bearish situation. We also had a negative crossover. The faster moving average crossed under the slower one. The green line got under the red. Okay, that's also bearish. The cloud has turned bearish here in QQQ. Single span A got under the single span B. We generally want to see that light colored blue line of the cloud above, not under the single span B. We seem to be stalling around this area here, around 595. You can see that double bottom there. Maybe this will turn into something next week. Okay, we'll see. But right now, there's nothing exciting happening with the Qs. The Dow Jones, the DIA ETF, up 0.36%. Looks stronger than the Qs, but as you can see, we even got a bullish engulfing pattern here, this larger candle engulfing the small red one, but we are still under the Tenkan-sen. And the red line is still above the green line. And if you look at the ADX, it's kind of like slightly moving up. Okay, so it's nothing, that's not a good sign when the red line is above the green line. We want that green line back above. If you see the red line above the green line, and the ADX is moving up, it tells us the momentum is increasing, but in a negative way. I'm just going to go back in time. I want to show you guys if we can find it. A moment in time where like right back here in 2025. All right, you can see here the Dow was dropping under the moving averages here. And if you look down below, we got that signal on the directional movement index right there. It's very clear to see. So here's the ADX was moving down. All of a sudden, it starts moving up. Okay. And if you go straight up, and notice the red line is above the green line. If you go straight up, okay, isn't that amazing? And it led to that huge drop. Over here, you can see that the ADX dropped a little bit, right? So then what happened? Well, price started moving up because the momentum to the downside started to decline, but we were still under the cloud. So we knew it was not a good time to be adding position, right, in the Dow. In fact, it was stalling right at the Kijun-sen, a very strong level of resistance, and it kept on hitting resistance there. And then what happened? It started moving sideways, and then look, the ADX started moving back up again, right there. And then we had this big drop in April after the announcement of the tariffs, which started this whole big drop. This was an unnecessary drop, really. The market was doing fine. The tariffs caused that. Now, I think, and I'm unsure if this is going to lead to a big move. Like we should have seen a much bigger move, but because we don't know exactly how those tariffs are still going to affect, the markets, we still have to wait out, and see more evidence on the charts, in my opinion. The good news is the VIX dropped 5.04% today, back into the cloud here. and it's at a level of 19.2, which is slightly more elevated than it was back here in December, where it was only 13. We don't want volatility to be increasing. That's generally a negative for the market. Okay, so, and it's positive when it's declining, like right here. You can see how the indices were all up today. Okay, so let's take a look at the Mag 7s. We've got Apple, which is on the daily chart is currently still under the cloud, but on the weekly chart, it is looking more bullish, right? We don't have both time frames confirming that this is the right time to add, based on my strategy at least. And so I wouldn't recommend Apple here. Google is also, yes, it had a nice day up 4.08%, but it is still inside the cloud. And the good news is, look, where the momentum, like I just mentioned a few seconds ago, where the momentum was moving up and the red line was above the green line, right? You can see that decline right there. And then the second right there where it started to decline, the momentum started coming out. You can see that it's now starting to move up again. So that's positive, higher volume. We might see a continued move on Monday, but we're not out of the woods yet. On the weekly chart, we're still under the Tenkan, the 9 period. Ideally, you want all the indicators to be bullish, right? We want the green line above the red line, price above the moving averages, above the cloud. And we want the Chigu span. The one thing I forgot to mention is that white line, we want that to be above the candle 26 periods ago. That's more bullish, okay? We don't have that here with Meta on the weekly. And on the daily chart, we just got above it today. Do you see that? Okay, we got above the candle. And the cloud itself, well, it's still bearish in the future here. Single span A is under. But these last 3 days or 4, it's been moving up slightly. Nothing special happening here with Meta. Microsoft still in a decline, down 0.31%. It looks like it might be finding a bottom down here. You can see that very clearly, that it might be finding a bottom, but anything can happen here. I would be very cautious, and I wouldn't be adding positions of Microsoft in quite yet. If you look at the weekly chart, we're still into the cloud, and we might continue down to the 200-day before things maybe start potentially reversing. That might be another 5.4% decline. You've got Netflix that's been pulling back here. All right, under the 82.11 level, under that prior low on the weekly chart. Here's the daily chart. So yeah, I mean, that's not good. It's up 2.17%, but still under the moving averages. No on Netflix. Nvidia, still in the consolidation stage, still inside the cloud, up 1.02%. Earnings come out next week, February 25th. So let's wait and see what happens. It's either going to pop to the upside or pop to the downside. Earnings will give us that the insight that we need, and the chart will represent it. How does Wall Street take that information? Sometimes the information can be positive and yet not positive enough, and then the stock gets clobbered over the head and it drops. Other times, better than expected results, and then you see the thing jump 10, 15, 20%, whatever. So we'll see how Nvidia reacts next week. Tesla is under the cloud still, bearish cloud, under the Tenkan, under the Kijun. Okay, and there's the daily, and here is the weekly under the moving average here, Tenkan. So it's pulled back. All right, let's take a look at oh yeah, the CNBC stocks that they brought up on the show. Let's take a look at those real quick. Now I've highlighted the top 3 here with a little blue flag. What that essentially means is that these look strong on both the weekly and the daily time frame. Okay, the rest of these, there's something off technically, and they're not hitting all the marks. XLI, for example, on the weekly chart, you can see it's a strong uptrend. The ADX is still moving up. It's getting a little bit elevated. The directional movement index, when it gets over 43 or so, or 45, it starts to generally doesn't stay up at these levels for that long. It's over here, the last time that we got to that level 53, for example, for the ADX, it dropped, right? So I don't know how much more sustained this move will be, but it's looking good in the weekly. It's looking good in the daily, and that was a weekly chart, so that can last a lot longer. We can see this for another month or two, still continue to move up easily. ODFL on the weekly chart is stalling at that 204.35 level. It is a daily level. Here's the daily chart. What is that based on? Well, it's really based on an old moving average or an old high. So let's revise this because it should be based on this high right here. of 208.74. So in addition to using the Ichimoku indicator, it doesn't hurt to also look to see where your prior levels of resistance might be, which is prior highs. That's the 208.74 level. That's the target. It's about 3.2% away from here. It might stall when it reaches that level, but it could also just break right through it. Next earnings for this company is April 22nd. It's a strong company. It's got positive profit margins of 18.97%. Okay. Sales growth rate over the last 5 years is over 6%. Positive operating cash flow, $1.5 billion. It's a $41 billion capitalization. And I like the PEG ratio here. 1.52 is very, very healthy. That's good. Okay, so let's keep going. So I like ODFL. It looks good. What about RIG? Transocean Limited. That's the ticker symbol, RIG. Well, this one, even though it has negative profit margins, and it's been taking off here. So you can see the price movement here has significantly moved up since it broke through the cloud. Let's find out exactly when it made sense to get into this. Probably around here, where you can see that there was some consolidation. Okay, you can see that consolidation right there. Okay, you can see that that was probably not a bad spot to get in. And remember, I'm a breakout trader. That's what the reason I'm a breakout trader is because I know that once we break through some levels of resistance, we have a higher probability of a more sustained up move, especially when we get the confirmations with these moving averages. And I'm sorry, the moving averages and the directional movement index. Look at this. So from this point right here, we've already moved up 44.55%. That's on a daily chart. So the fundamentals can be negative and a stock can still move up. There's no correlation between the fundamentals and price movement. Obviously, I'm sure you've experienced this over the years. Here's a weekly chart, you know. This company, by the way, at one point, okay, it was around, wow, that's an old trend line. Let's get rid of that one. It was around $160 a share, 162 or whatever it was there. And that was back in 2008 or so. Okay. And I mean, look at it, 96% drop since then. But you know what's happening right now? On the weekly chart, we're seeing it break through the cloud. Okay. We're seeing the ADX moving up. The green line is moving up. The red line is moving down. And if you look at the daily chart, we've got that confirmation, right? So we've got confirmation on 2 time frames. What if we switch it to a lower one, like 2 hour? Sure. You got it there too. How about a 30-minute? Yeah, looks good. Okay. I mean, you can go down to 1 minute if you want to. All right. And it still looks good right there, pretty much. I mean, Tenkinson is under Kijinson, but you know, you can certainly consider something like this. It's a sector that makes sense right now with the potential of war in Iran. Yeah, in the next 10 days or so, we're going to find out what's going on with that situation. That could be a little nightmare. XLY, here we are on the weekly chart. Under Tenkinson and Kijinson. All right. So that's why it doesn't have a blue flag here. Okay. But it was up today. Here's the daily chart under the cloud. So no on that one. It's in a downward channel. XLK is into the cloud. I'd skip technology. Yes, you heard it right. I would skip the technology ETF XLK. The red line is still above the green line. We're still in a decline. We have a lower high here from the prior high, but we do have a higher low. So that's called a symmetrical triangle type pattern. I'll just draw it here so you can see it. That's on a daily chart. I don't know which way it's going to go. Maybe we'll break through that. If you look at the weekly chart, we had another symmetrical triangle, and that didn't turn out so well. You can see when price got under that line right there, that trend line, it continued to drop for what? 1, 2, 5 weeks now. We're under that symmetrical triangle. All right. So, yeah, if you see a blue line, by the way, blue lines that represents weekly charts. If it's a red line that I've drawn, it's based on the daily charts. Okay, let's keep going. IGV, no, it's still depressed here for multiple days. You can see that, but it's found a little base. It's building a base. But the question is this going to be a bullish base, or is it more likely to drop some more? I think it's more likely to drop some more. Technology obviously is not looking that great. Why would the software index fund do well in this scenario? Just because it dropped so much? I mean, it's coming down to these lows here. I think you could easily drop another 4.5% maybe before maybe we can see a little bit of a move up. But until price breaks and closes above the Tenkan, you've got nothing here. You can see that this moving average was very successful and very accurate in keeping in basically keeping us out of the trade. I think, you know, that's the one thing that you have to think about is if you can keep yourself out of trades that don't make any sense, then you can put that money to use, right? In a more positive stock that's actually showing some, uh, a sentiment change. All right, we don't see that here. I mean, we're seeing a stall right now. That's all. OWL, Blue Owl Capital. All right, this one here, not looking that great. Look at this. Look at this, guys. I'm going to show you something. This is what I'm talking about. So things might look bullish for a little bit, but then look, it closed under that low right there. It's very easy to see. That's bearish. And look at the volume down below that confirms it. See these little volume bars way above that white line, which is the 50-day moving average for the volume. Look at the ADX. If I zoom in on that, ADX is still moving up. And remember what I said earlier, when that red line is above the green line and the ADX is moving up like it is here, expect it to drop. Over here, same thing. Expect it to drop. Okay, let's keep going. Let's keep going here. Let's look at CRWV, or Weave Inc. Technology Sector inside the cloud. No, on that one. And look, the ADX is starting to move up again with the red line above the green line. I would stay the heck out of that one. Look at that volume bar. That's not good. Up, down 8.12% today. Their earnings came out on February 26th. You know, again, the earnings announcement might change everything, but I'd stay out of that one. Apple Oven up 1.62%. Not the time to get in. Once again, you can see how it's stalling right at the 9 period. Over here, it got above it briefly, but it was a reversal candle. It was a doji. You don't want to be adding positions on that. We were under the 200. We were under the Kijinsen. We were under the cloud. The Chico span was under price. The cloud was bearish. I don't think I need to say anything more about that. How about the members' requests? Let's take a look at some of those. FET, Forum Energy Technologies. Look at this beauty. Let's look at the weekly chart on that. I mean, it's interesting how the 200-day moving average can also be very effective in keeping price at bay, even when it breaks above the cloud. If you see that the 200-day is right there, generally speaking, it's not a good idea to add when you're at a level of resistance. You can see that it stalled here also for multiple weeks at the 200. But once we cleared the 200-day, which is that dotted yellow line, bada bing. And let's measure that. Let's measure that. So from that point, it moved up 158.32%. And when was this? This was back on August 8th of 2025. So this stock has done really, really well. Here's the daily chart. Still looking very strong. Volume very strong. I mean, does it seem a little bit extended up here? It does. But I mean, the thing is still on fire. The ADX is still moving up. I need evidence to suggest that it's time to get out, and I don't see it here yet. I just see maybe more participation, more volume, more traders coming in. But if we get a reversal candle, that's what you want to watch out for, especially if you see that the price gets far away from the moving averages here, too far away. Okay, maybe we'll have another bullish day. I mean, price gets really high, and then you start seeing a reversal candle, like this type of candle. Okay, like a doji or a shooting star type candle. Then you have to maybe you might want to consider taking some profits at that point, at least partial profits. All right, the rest of these guys do not have a blue flag. There's going to be something off about these. Let's start off with a weekly chart for Chewy Inc., which is under the cloud, but we've got a piercing line pattern. It's a bullish pattern on the weekly chart. It was up 2.28%. It recovered above the 2620 level based on that prior low right there. But as you can see, ADX is still moving up while the red line is above the green line. So no on the weekly. Here's the daily chart. Again, also very bearish here still. Showing just a little bit of strength these last few days. KWeb. KWeb also dropped, but as you can see, it recovered. It kind of stayed above this low, which is interesting right here. Check this out. This low right here. So it's finding some support right around that area, and it stayed above it, which is interesting. So maybe we'll see this move up a little bit, but it's still under the cloud. I wouldn't recommend this one, obviously. Here's a daily chart, and here's a weekly chart. Oh, okay. So this kind of makes sense as well because it's a support level, the single span B, the part of the cloud there. When it comes into it and touches it, a lot of times it will rebound. Sometimes, not always. And so that's what we're seeing, I think, here. And so I was wondering why it was turning around there. Okay, let's keep going. Silver, SLVR, which is the Silver Miners and Physical Silver ETF. You can see the ADX is flat right now. Green line is above red line, so that's good. But the faster moving average is still under the slower one. So this is definitely not a buy signal here yet. It seems to be breaking above. Let me see. Let me just go ahead and throw that high right there. That high there is $72, and it's got above it 73.14. So that's a good sign. But look at the ADX flat. Let's look at the weekly. Weekly chart looks really good. It's above the Tenkan Kijun, above that 72, like I said. But the volume, there's not a lot of volume coming in here. I'm not getting that participation that you'd want to see on a breakout candle. Like a nice candle like this should have a lot more volume, and it doesn't have it. So you should be a little bit suspect about that. All right, let's keep going. Uber is creating a bullish harami pattern right there. So it's got some potential, but it's under the cloud. So why take that chance? That's the weekly chart right there. Here's a daily chart. It's showing some strength. You can certainly, play this as long as it keeps moving up. If you have a position in it, you can use a 2-hour time frame. You can see how everything has changed here. You go to the 30-minute, it's going to be above the cloud. But look where it's stalling right at that 200-day on the 30-minute chart. So keep an eye on that on shorter time frames if you have a position in it. Wix on the 30-minute is under the cloud. On the 2-hour is under the cloud. On the daily, it's under the cloud. On the weekly, it's under the cloud. I mean, it's just where might we find some support here? Let's see. I mean, it broke that support right there. That was broken. It looks like we've got some support levels down here. So let me go ahead and throw in. What I'm going to do is I'm going to switch to a monthly because, yeah, I think we need to look at a monthly chart. Let's take a look at that monthly. Right there. That's the low right. Oops. So low 53.12. Yeah, it looks about right. So let's fix that. So 53.12 is a level that I would definitely watch. I'm going to color this purple to represent the monthly level. And let me get rid of these. We don't really need these older ones. So here's the weekly chart again. Yeah, I mean it's just heading in that direction, right? We're about, let's see, we're about 21.6% away from 53.12. So I wouldn't be shocked to see it drop some more. Unfortunately, this is a weekly chart. Here's a daily chart. Okay, so remember, Ichimoku stands for at a glance. Okay, you can quickly assess whether a stock is healthy or weak. And this is obviously a very weak stock, and it has been since this point over here, where it got under the 200, under the Tenkan, under the Kijun, all in one candle. This was the candle right there, October 1st, 2025. Since that point, if I just look at the closing price there, it's dropped 56.5%. So yeah, it just doesn't. I'm guessing there's a lot of competition now in this space, and the technology sector right now is also very weak. What about WPM, wheat and precious metals? Here's one that spiked a little bit. It was up 3.47%. Got above the moving averages here. The directional movement index is starting to show a little strength here too. The Tenkinson is still under Kijunsen though, the faster one, but it looks like it's got more potential. And the area that I probably want to watch on this, let's see, throw that level right there. The high there of that candle is 150.50. Okay, and we're just under it. We're at 150.38. So if we can break above that, it has a higher probability. Let's look at the weekly chart. Weekly chart looks good. So it needs to get above that 150.50. You'll also get some more resistance at the high of the weekly level there of 160.36. Let's change that color to blue to represent that time frame. And so You got resistance on the daily chart at 150.50 and resistance at 160.36. The 160.36 is around 6.4% away. And okay, guess what? Did you notice how we just went through all that? We did that all in 30 minutes, folks. We went through a lot of stocks. Now, if you guys like what you're seeing here and you want to support this channel, do me a favor. Hit the like, hit the subscribe button, hit the notification bell. All that is free to do. Okay? Free, free, free. Doesn't cost you anything. If you want to go one step further and get access to some of my members only videos, I'm going to be putting another one this weekend. I do it every weekend. I go over my entire portfolio. I add and I basically go over 27 new stock ideas. How do I come up with those stocks? Well, it's a top-down approach. I'm looking at the strongest sectors. I'm looking at the strongest industries within those sectors, and then breaking it down to the strongest stocks within those industries, right? And then so we're getting um, a really good idea of what we should be focusing on. At least, definitely the industries. And this week I added a whole bunch of the stocks that were in the list that I made last week. So once you become a member by hitting the join button, you'd want to select this level, Blue Cloud Trader level. That's the second level to get access to those member only strategy videos. You'll also be able to request 2 stocks for ETFs each month, just 2 stocks per month. Okay. Under Blue Cloud Supporter, which is the top level here at $4.99 a month, you can request 1 stock or ETF be analyzed once a month. Under Blue Cloud Legend, okay, this is where you get some more features, some more great perks, such as some of the day trading videos that I've recorded. You can access those. But I think the most critical one is the daily stock and ETF trades update. Every day before the market closes, what I do is I share the trades that I'm placing, and I also give a quick assessment of the market, what's happening that day, and I also like basically create a screenshot of the scan results from my proprietary scanner that looks for those, like I just mentioned, stocks that are strong on both the weekly and daily time frame that specific day that are giving us a buy signal. So there's a lot of great stuff, and you can try it out. Why not just try it for a month and see if you like it? I mean, most people end up sticking around and they like the channel, and the majority of the people who do become Blue Cloud Trader level members end up becoming Blue Cloud Legend level members. We have more Legend level members than we do traders or supporters, just so you know. So consider becoming a Legend level member. Guys, that's going to do it. Thanks for watching. Appreciate all of you. Hope you all had fun with over the weekend, and also got a good little giggle with the video that I created at the end there. All right, I'll catch you all in the next one.